Well, good morning, everyone, and welcome back to our trading room. It is Monday morning, March 2nd, first trading day of March. So the market's just opened. I'm going to get you my screen here. And as I said, we're going to try to be a little bit more realistic with our trades. I've been pointing out trades to you, different setups and whatnot. But we're going to be looking at being a little bit more selective. For those of you who are new to the room, what you're looking at is the diversified trading system, and we've got the NASDAQ here on this particular monitor. The Hawk Scalper is in the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. As I mentioned, this is the NASDAQ. On my other monitor, I'm also watching soybeans and crude oil. Crude oil making a little bit of a move to the upside. We had a trend change signal occur right here with a nice little bit of a higher swing. Soybeans fairly stagnant for the most part. Here's soybeans on the Eagle. So not a whole lot going on with soybeans at the moment. They did put in a little bit of a rally, but you see if we shoot a trend line across the bottom here, it looks as though that might be falling apart, maybe. And here's the NQ. Let's take a look at the NASDAQ here in the overnight. Not too terribly active. We did see a little bit of a test of the extreme here, a macro pullback signal. Nothing too exciting. The market did not follow through on the first micro-macro cross to the downside. It didn't trigger. Just printed the warning dots. And here we're coming now with a green bar sell. So it's only a few minutes into the session. We'll wait for them to get their act together. Normally, certainly the first 15 minutes, half hour of trading, I try not to get too excited, especially lately. You know, in January, we were getting some fantastic signals right out of the gate. Okay, we're working on a first micro macro cross now to the upside. This could be a little bit interesting. Thanks, Jim. Jim's given me the advanced decline numbers. It looks like they started fairly even off. Now they're moving slightly into the positive territory. This darn market, it has been so aggressive. Everybody thinks that it's ready to top out, including myself. But it's exactly at that time when the market likes to fool you. And Jim says the banking indexes are strong too, which would suggest that we might see a rally. We'll see. Yeah, like Bob says. Good morning, Bob. Nice to see you in the room. Bob says, I won't go near the first 15 minutes. That's not a bad strategy, actually. Okay, somebody here is saying they're not getting any audio. Can I just get a sound check, please? Hello? Can you? Oh, okay, good. Thank you. Thank you. Okay, so we're seeing more of the same, more of the market just kind of trying to find its direction. It's not unusual, of course, Monday morning and all. A lot of times what happens is you see a flood of orders hit the floor, and that will spike the market one way or the other, but that's not the case today. It seems like a continuation of last week. I was really hoping the market would start to shake itself out a little bit. soybeans trying to move outside of their trading range. I'm going to show you here in a second. Oh, Jim's got his pulse on all the market internals. He's saying the New York Stock Exchange advanced decline line and volume are lagging and diverging. Interesting. That explains a lot of the choppiness. Usually you'd like to see the markets, in sync. You'd like to see, if you're watching something like advanced decline, if it's increasing, you'd like to see the volume increasing with it also, and vice versa. He says the percentage of SPX stocks, those would be like the S&P stocks, above their 20-day moving averages or at 20-day highs are declining or heading south. And I think if anybody was ever looking, I like looking at a daily chart. Let me see if I can build you a daily chart and you'll get a feel for this as well. So here's the E-mini, and the NASDAQ will look the same. You see, you can get a lot of information from a longer term chart as well. A lot of times I like to liken this to throwing a ball in the air. And when you first throw the ball takes off, and then as it reaches the top of its arc, it starts to slow, and then it's going to try to come down. See, same thing happened here. Big run up, the ball slows down, and all of a sudden the ball comes down. Another one, ball goes up in the air, slows down, and then it falls. So I think a lot of people are looking for the stock indices to perhaps turn over a little bit. Of course, that's always the time that they rally. I got a few people asking about Jim's sources for his information. A lot of times, folks, you can get this stuff from your own data provider. Like if you're using, hold on a second, let me see if I can show you. So here, if you go to your NinjaTrader and you type in New York Stock Exchange, you can see right here, New York Stock, advanced declining issues, advancing issues, declining issues. There's a whole slew of different indicators, like the VIX is a big one. A lot of people like to watch the VIX. Oops. But all this sort of stuff is only, you should only use it if you find it helpful in your decision making. You can still, and no offense to Jim's information, it's obviously working for him, but you can still lose money watching the advanced decline. You can still lose money watching the ticks. You can still lose money watching whatever. Jim says yes, and miss signals. You can still miss signals doing all this. Now, there's nothing wrong with what those are. People refer to those as market internals, the stuff that goes on at the New York Stock Exchange. I had a friend, well, still have a friend. He used to trade a $30 million bond fund, so a rather substantial bond fund. And he used to have 7 screens and a dozen indicators just to trade one market. Not 7 different markets, not even 5 or 4 or 3 different markets. One market, 7 screens, a dozen indicators. And he threw it all away and went back solely to price action. And he did the same kind of money trading no indicators as he did surrounding himself with indicators and tools and gadgets and such. We can't help ourselves, granted. It's human nature, I think, to want to tweak and experiment, and we always think that's where the problem lies, is that, if I could just eliminate that losing signal. No, that's not where the problem lies. There will always be a losing signal. Always, always, always. All right, most of the dust is settled. You can see we had a little bit of a shot here to the upside off of this first micro-macro cross signal. Excuse me. So here's the NQ again, doing what the NQ does. Yeah, like Jim says, it's multitasking at its best. We like to busy ourselves. We like to think that's where we need to be. We like to think, if we only had that one other little tidbit, we must be missing something. That's why we're not making money. No, that's not it. You're not making money probably because you're over trading, and probably because you're trading too much money relative to your account size. That's what ruins more traders than not watching the VIX or not knowing about advanced decline or anything else you can think of. Nicely done, Dustin. Dustin says, well, right or wrong, I got 30 ticks off a Hawk and Falcon trade. Well done. Well done. Huh. Jim says he sees a lot of bulk trades that are coming in at rather large volumes like 90, 91, and they're odd numbers like 9105, 9181. How is that? That's a good question. He says, is that how they get teenies? No, not really. They get teenies off volume for sure. And teenies, by the way, folks, are nicknames that floor traders use for fractions of a point. Some markets, especially stocks, trade in sixteenths of a point. So you can pick up a teeny. And they normally go in with size. And a lot of times when they're trading teenies is they try to trade the spread. They see a gap in the spread, the bid-ask spread, that would be, which is a lot more difficult to do in a market like the S&P, which trades very, very tight. Ditto for the NASDAQ. Usually if you're looking to try to trade the spread, you'll pick up on actually lesser known stocks like utilities, stocks like mortgage funds, stuff like that. Sometimes you can exploit the spread in a market like that. Rarely can you exploit the spread in a market like the S&P. Or at least we can't. By the time we get the information, that it's a done deal. Okay, everybody's kind of settled in a little bit. Well, looks like we've actually might have picked a direction today. Yeah, look at them go. Well, okay, this is encouraging. We might actually see a decent week out of the market this week. Okay, excuse me just for a moment, folks. I will be right back. Okay, I'm back. Sorry, I'm fighting off this cold and my nose is running like a tap. Joe is asking, whenever my computer locks itself, the trade manager disappears on my charts when I log back in. Do you know why? Yes, because the trade manager is a strategy and it needs a data feed to run. So as soon as you disconnect from your data feed, your trade manager will disappear. Oh wow, what a rally on the NQ. Look at that go. Dustin says, I wish I had runners in play. Yeah. Oh well, at least you took some of the trade. Look at this. I wasn't expecting it to rally like this, obviously. We had a trend change signal here right out of the open. I thought we were going to see a little bit more going on here off of the highs and whatnot. No, no, nice trend change signal, big follow through. Market not even pausing to look back until now, of course. Here on the Raptor 2, we had a trend change signal, or sorry, not trend change signal, but the first signal out of the band after a double pullback into the band. And there it comes right there. Same thing, you know, I thought, oh, well, we'll get another chance. We'll see a little hiccup. We'll see a bounce and a retest, and then we'll go, no, no, none of the above. now we're seeing a little bit of that reaction. Crude oil pushing hard. Here's crude oil on the hawk. First micro macro cross here. Wow, that would be a fantastic one to have a runner on also. Moved about $800 so far, about 80 ticks. Yeah, the NQ is lagging. Jim says the NQ is behind the bunch now. And this is true. Okay, we're working on a little bit of a macro pullback signal now. Oh, look at that. They did. I did not expect them to reach the first profit target here on this macro pullback, but they, oops. But they did. Okay, crude oil giving us a couple of macro pullback signals here in a row on our hawk. Now this is, I don't mention this very often, but this could be a counter trend signal. You can counter trend any of your signals. So you could trade that as a failure. However, crude oil still in a bit of a trend here. Nice thing is we have seen a test of the extreme. So you would think if it breaks down below here, we might see it go hunting for support a little bit, seeing how there's some rejection off of the highs. And the Falcon also starting to give us a little bit of a trend change signal here. Not quite. We do have the double dot, the reaction here. The trend line is just changing over. So I think we might see crude oil dip a little bit. Oh, what a crazy market. Just does not want to give it up. There is no bad news for these markets of late. Everything is good news. Yeah, like Joe says, it's a bizarro market. Like the bizarro cartoons, I'm sure. All right. See, I always hate being the last one to the party. And I'm just throwing that up there to see whether or not they can really push beyond this. I'm not taking this trade. I'd like to see perhaps something like a late filter entry or maybe even a trend change signal. I've also got my eye on soybeans, which have broken out of their trading range to the downside. They did give us a trend change signal right here, and a nice little follow through on that. Soybeans, of course, trade at 12.50 a tick, so our profit objectives are a little bit easier to achieve. So now that we're outside of this trading range, I'm looking for the retest and perhaps a move lower. So that's what I've got my eye out for on the soybean market. Crude oil working on a possible trend change here signal also. So our trend line is now flipped over, and you can see our filter is waffling also. So if this comes back with a sell signal now, that will be a late filter entry signal and maybe a decent opportunity to short crude oil. I'm a little leery on the shorting just because, well, the market today anyways has been more or less in an uptrend. So I try not to do too much against an obvious trend. Same thing here with the NQ. We've got an obvious rally. I'm not that keen on selling it. However, I'm not that keen on buying off of the highs either. Okay, so crude oil not rolling over at the moment. In fact, they've come back with a with trend signal. And soybeans. So much for waiting for soybeans to come around. They've traded right back into the heart of this channel. I suppose I can throw a trend line across the top there. All right, just waiting. You see, my concern here with the NQ, the markets you've heard it time and again, they're all about fear and greed, right? This essentially puts in a graphic form people's fear and people's greed. And I'm not saying fear and greed in the totally negative sense of the word, but it's a fact of life, right? We're all fearful. We're all greedy. And again, that's not greedy or fearful in the total negative sense, but we want to maximize our returns, right? We're not just doing this for the fun of it. We don't want to incur losing trades. Well, here the market made a big run up, right? So now everybody's fearful about missing the next move higher. So the market tees everybody up, generates a buy signal, and this one has very little follow through. In fact, the first buy signal came right here. I still don't think we hit our high probability target. Oh, look at that, got very close. Came within a tick of our high probability target. So had I taken this particular trade here, I would have at least had an opportunity to do something with my stops, perhaps bring them up a little bit. I'm not sure I would be sweating the trade this much, but even if I were, not bad. You know, I'd still have about, it looks like about $250 in risk at the moment. But the point is, it looks like now the fear part of the equation, the other fear part of the equation is coming into play, where traders are going to start bailing because they're fearful that they're on the wrong side of this trade. Well, guess what's likely to happen then? Not so much that prices will come down, but rather that we'll see another setup for perhaps another rally. Sometimes, you know, if you open up your chart like this, excuse me, and you see the market has bolted and you missed it, well, sometimes you just have to accept that you missed it. Unfortunately, the markets will not charge on indefinitely. It does look like we're having a bit of a bullish session today. So I am on the alert for buying opportunities, but you know what? If I miss another or if I get shut out, well, then that's just how it's going to be. I might test the waters here on the Falcon in a moment. Yeah, like Joe says, it is what it is. There's always tomorrow. right? You don't need to do anything silly. Suncom says, I was a chicken on the NQ. I put an order and canceled it before I took it off. Yeah, I know, it happens. You know, I chickened out on the NQ also on this macro pullback. I saw the macro pullback. I thought, well, the market should have cleared itself by now. I didn't take the trade, but you can see it did have decent follow through to it. Certainly rallied enough to find our high probability target. The one I'm really a little choked about is the first micro macro cross that came shortly after the market opened, especially off of the green bar sell here. And when you miss a signal, like Suncom was saying, you put the signal on, pulled it off, take a look and figure out why you did what you did so that the next time you don't do it. And you know what? This is something that's going to plague you for a while. You know, I've been doing this for a while, and you see I still miss moves. So don't beat yourself up too much when you do it. But what I'm going to mark in my journal here is that I had the green bar sell. I had my test of the extreme. I had the failure of the green bar sell with the first micro macro cross, right? It broke through here, generated a first micro macro cross almost in the same neighborhood. No matter how I want to take a look at this, say this was kind of like a bear flag, there were a lot of things suggesting here that this, besides the fact it was a first micro macro cross signal, that it should have some follow through to it. And of course it did. It did very well. But I didn't take it when I had the opportunity, and there's nothing I can do about that. Things have slowed somewhat again. I think traders are kind of checking everything to see where they're at before we either see a decline or perhaps another rally. Joe's asking, yeah, see, Suncom says, I'm still beating myself up for missing the opportunity. No, don't. Don't beat yourself up. Trust me, it will not be the last one you miss. And same thing when you take a losing trade. Don't beat yourself up for taking a losing trade. You will take losing trades. Do your best to learn from them so that you hopefully don't do it again. Okay, Joe was asking here, what's the difference between Trailblazer and Trail Manager? Okay, I have the Trailblazer loaded here on the Raptor only because the Trailblazer, I believe, is native to the Raptor in the Raptor package. Now, that does not mean that you cannot use Trade Manager on the Raptor. Neither does it mean you cannot use Trailblazer on your Hawk, Falcon, or Eagle. The principal difference, there's two main differences, I suppose, between Raptor and Trailblazer. Trailblazer and Trade Manager. Trade Manager, let me go to that one first because it's a little bit more in depth. Trade Manager has this Risk Manager module down here. And the Risk Manager allows you to control your risk to a certain percentage of your account. In this case, I have it set at 2%. So that means no matter how I set up a trade, I will always be risking 2%. So there's $350. If I trade it like this, it's still about, $350, $400. But what does change is my quantity size. Trailblazer does not have that feature. Trailblazer has the management feature, so you can manage your trades, but you preset your quantities, how many positions you want to take. So what that does is you need to have a pretty good idea, roughly, a pretty good idea what your average exposure will be. So if I know that for the way I normally set up the trades, let's say I want to enter here and exit here, I'm normally going to take 2 contracts. Well, then I can either preset 2 contracts with a target, or I can set 1 contract with a target, another contract with a second target or as a runner. But I preset all that here. And then what I do with Trailblazer is I manually enter by right-clicking on the chart. I will pick my order entry. Now, this order is live the moment you put it on your chart. Unlike Trade Manager, where I set my trade parameters, like buy, sell, and then I have to hit my submit button in order to make that order live or pending. In Trailblazer, this order is live the moment it's put on your chart, so you need to be careful where you put it. I normally place it above where I intend to enter, and then I'll pull it in, or vice versa, below where I intend to enter, and then move it up. And the nice feature with Trailblazer is that essentially makes it a one-click entry. We had people requesting this before, where all you do is you enter your order and your stops are automatically activated, your profit targets are automatically activated. Whereas, once again, with the Trade Manager, I need to do at least a couple of clicks, right? I need to click my entry, my stop loss, and I can preset my profit objectives. And then I need to click to make the order live. So some people like the Trailblazer because it's essentially a one-click system where you place your entry wherever you want, and then if the market fills you, your stops automatically default to your stop strategy, and your profit target automatically prints also. So those are the 2 main differences: the risk manager function and the 1-click versus 3-click entry. Okay, things are looking very soft now on the NQ. And I've been experimenting here with the Raptor on these retracements back to the hard edge. I have a pretty good idea that if it fails here, it's going to try to retrace back to the hard edge around this 4460 region. I've been trying to find a decent signal to generate that, but for you Raptor traders, you can help me out on this if you like. That's something that I've been looking at. So we'll see whether the NQ actually does tail off and bring us down here to around 4460. We're probably going to generate a red bar buy, which I could sell. And you can see our Falcon is slowly starting to turn over also. So our Falcon band getting a little bit more bearish. crude oil started going sideways or more sideways. Trading friend of mine always used to like to say the big money is on the surprise side. Just when you think the market can't go higher, it'll go higher. Just when you think it can't go lower, it'll go lower. Early on in my trading, very early on, sometimes it would seem like the market knew exactly what I was going to do. If I bought, it went down. If I sold, it went up. It got to the point where I seriously considered fading my signals. And if I had a buy signal, I would sell. And if I had a sell signal, I would buy. Okay, while we're waiting for a signal to print, Suncom is asking, how are the support and resistance suite lines different from pivots? Okay, the support and resistance suite, which is what you see on my Falcon tool here, it's a forecast of 21 support and resistance areas. They are based on a rather complex mathematical formula that incorporates previous price activity into its calculations. Pivots, floor pivots, are based on the high, low, and close. And it's a rough approximation. Essentially what a floor pivot does is it takes an average of the daily range and then of the previous day's daily range and then forecasts it into the future. So it's a very simple calculation, and a lot of traders watch floor pivots, almost to the point where I don't know whether floor pivots actually occur on their own or whether they're more of a self-fulfilling prophecy, like Fibonacci levels or trend line support. These things occur so often, you wonder sometimes whether they really occur because there's some support here, or do they occur because so many traders are watching these particular levels? But yeah, floor pivots are a very simple calculation. And it's not that there isn't any merit to floor pivots. I just think that they've been overdone. If the support and resistance suite lines ever intersect a floor pivot or a Fibonacci level, it's more coincidence than calculation. Joe is asking about pricing for the add-on indicators like the support and resistance suite. Joe, there's no harm in asking about discounts for DTS owners, but you're going to have to ask Adam. And I'll send everybody Adam's email. I'm sure if enough of you pester him, he'll do something for you. All right, here's a signal in soybeans. It's essentially a macro pullback or a 4-arrow consolidation. We are getting a chance on a second push on this entry. This is a signal that we could probably, just throw a onesie on. We've been waiting for soybeans for a while. They broke out of this bigger channel. Well, here I'll show you on the Eagle, because that's really where we saw the channel. So they've broken out of this larger channel, gave us a retest. Unfortunately, I don't know what I was doing, but I missed the sell signal here. But now they've come back and they're working on another sell signal. So we do have that opportunity there on the hawk to perhaps take advantage of that. Well, everybody was playing so nice to start the day, and now it's like everybody's gone away. Where'd they go? The NQ floundering a little. crude oil with yet another push. Had a couple red bar buy signals here with a little bit of follow through, and then we came back with our first micro macro cross right here. After a little bit of sideways congestion, looks as though crude has put in a little bit more of a rally. Dustin is asking, how do you get 4 charts on one screen, and how big of a monitor do you have? I've got, where's my tape measure? I forgot what size my monitors are. I think I've got 2 21s and a 24, or it's 2 24s and a 27, I forget. But basically all you do, Dustin, is you build a chart. So hold on one second here. I'm going to build a chart. So you do a new chart, and I don't know, let's do the DAX. And so you choose your templates, and I'm just going to do this quick, so I'm doing just a basic chart. All right, so then your chart's going to pop up, and then you quite literally just grab it and resize it. And once you figure out what you just play with it until they're all about the right size. And because I have Trade Manager on here, I do it so that the chart overlaps the Trade Manager a little bit. I can actually make these a little bit bigger, but these are fine. And then when you see a signal that you like or you hear and you want to see that chart bigger, well, you just hit your maximize button. And then that will blow it up, and you can take a look at what's going on, and you can, place your trade, and then when you're done with it, you hit your resize button and it will pop it back down to the original size. So that's an easy way to get multiple charts on one screen. On my other monitor, which I'll show you here in a moment, you're going to see that I actually have 6 charts. So I've minimized them even more. Yeah, Dustin says I've got a 17. If you've got a lot of laptops, of course, are running 17-inch, you can do the same thing. And for whatever reason that my screen's not wanting, oh, there it is. Okay. So you can see I've got 6 charts, Hawk, Falcon, and Eagle stacked on top of each other. And we're just about to hit our profit target here on our soybean trade, so I'll bring that to break even. And there we go. So that was a nice little hit and run type trade, pretty high probability overall. And that's all I do though, Dustin, is I just expand the screen. I maximize it when I need it maximized. Oh yeah, and Joe says if you're running Windows 7, you can click on the taskbar and you have the option to show windows side by side. So it will actually automatically tile the windows for you. The only difference is that the way it's going to tile it, you're going to see more of the trade manager, but then it's just a simple matter just to grab it and pull it over wherever you want it to be. Dustin says with the trade manager on, I can hardly see the price action. Well, don't forget on the trade manager too, you have your hide trade manager button, right? So you can take it out of the way until you need it. I know it's one more click, but we do get the warning dots. We usually see the trade setting up, like the NQ is looking a lot more bearish here now. And in fact, you could call this an early trend change signal. The line did go out of sync here for a moment, but we do have our test of the extreme, right? So we're getting all the pieces in the puzzle here. So if this looks like a favorable trade, then you could hit your show trade manager, set up your trade accordingly, and then you could hide it again. And like I said, I realize these are all extra ticks, but it might be what you need to do. The other thing is if you are running off of a laptop, monitors are getting so cheap nowadays. You could pick up a 19 or a 21 or something and just plug it into the back. And either run dual monitors or just have a little bit more screen real estate. I've done that with my laptop. I don't normally use my laptop for trading, but I have done that with my laptop where I've got an old 19-inch monitor here. Okay, the NQ does look like it's rolling over on us a bit. Joe says he took the short Raptor signal. I was looking at it, Joe. Like I said, I've been watching the Raptor and looking for a viable counter-trend signal on it. Not that I'm interested in counter-trend signals, but just that, if there is a solid counter-trend signal, I would like to know about it. And as near as I can determine, if we get like a double red sell or a double blue buy in the case of a downtrend, it does seem to have some follow through to it. And I'm not going to be able to find you a double blue buy. But here we had a double red sell, and I would not be surprised to see it fall off here to around 44.60. But currently the other tools are not confirming that. We have obvious support here, right? So 44.66, a little bit of an area where the the buyers have dug in. Sellers have made a lower swing high. So if we come back with another sell signal here, we are getting the first micro-macro cross on the Hawk. Our Falcon is mildly bearish. Looks like it could have squeaked a couple extra bucks out of our soybean trade. So I entered right about there. A little bit more, but can't complain. It was like I said, a pretty high probability setup overall. Except for the early morning run-up, the market's been fairly neutral, though. Or at least it seems that way for the last half hour, 45 minutes. Everything happened right out of the gate. Joe writes, "You snooze, you lose." Yeah, that's how it goes sometimes. Okay, we're getting a first micro-macro cross here to the downside. That might give me an opportunity to hop in. I'm going to just go in light. And I'm going to hold my stop back just a bit. This is a little bit more aggressive because we haven't really turned over yet, right? Here's the sellers down here, 44.66. I could look at adding a position there. See, we're getting a little bit of heat here from our trend line. Oh, they're hanging tough. Come on down. You know you want to. That's the problem of trying to sell into an uptrend. Yes, James is asking, is that green line the 10 a.m. high? Yes, sir. It sure is. So around 44.70. The safer entry would have been below the lows, below this 44.60 area, or sorry, 44.66. That darn trend line is really holding tough, isn't it? Look at that. Well, things are getting a little bit quiet. It is getting close to the lunch hour. Sometimes we see things pick up a little bit um, when the trading floor clears out somewhat, although I guess this is an electronic market. The concept remains the same. It'll be curious to see what happens to the markets when they go fully electronic. And that will be this summer. Well, I'm not liking the fact that the trend line held so well. We're getting a double dot buy. That's why I went in a little bit lighter on this instead of taking the full 2%. I just kind of threw a onesie on it to see what would happen. There's still potential for this trade to work out. We're covering above a pretty good spot here, above this swing high. But we do need to see the sellers show up. Oh, good for you, Joe. Joe says he took 4 trades so far, 3 winners, 1 loser, and he's currently sweating the last one. Okay, you guys, we're in the last few moments of the room. If you have any questions, please type away. Otherwise, we're going to button things up here in a few minutes. If you are trading this afternoon, well, the market is in a little bit more of an uptrend today. No question about that. Of course, that doesn't mean that we can't see it lay off a little bit. Like I said, I still believe we'll see 44.60 out of this session, or at the very least maybe 44.62. That would bring us very close here to our hard edge on our eagle. So I'm thinking that's a distinct possibility. That's for the NQ. If you are trading soybeans, outside of this trading range that we were looking at. So soybeans looking a little bit weaker at the moment. I think we might see soybeans continue a little bit lower. And crude oil, well, crude oil being very stubborn to give up its early rally, even though we are working on a possible trend change signal here in crude. Let's see, where did this rally start? Yeah, they've been rallying all morning. And it looks like they've starting to roll over a little bit here, but if you are going to sell it, I don't think I would get overly aggressive to the short side, but you know, move back here to 49.90, that would not be out of the question. Okay, you guys, we'll catch up with you again tomorrow morning. Hopefully the markets will be working for us a little better yet. We'll talk to you later. Bye for now.